Brad Gastwirth is with us, Chief Technology Strategist, Wedbush Securities. Dan Morgan, Vice President, Senior Portfolio Manager of Synovus Trust Company. Thank you both for being with us. Dan, Brad, I'll start with you. Tell me more about what you're thinking here when we talk about Uber. You love it? Not really? Why?
Dan, it's a good question. I mean, clearly Q2 is going to be the most difficult quarter this company will face, most likely in the history of the company. Most states were closed down. Most travel was pretty much halted. So the ride-sharing business really got significantly impacted. However, if you look at their Eats division, you should see significant growth. And we saw that last quarter. That's continuing. Dara made the comments on broadcast saying that you had Uber Eats over 100% growth. I think you're going to see probably a nice beat to that number that he talked about a few weeks ago. And I think the outlook's going to be quite positive. So I think if you look at the stock's telling you a few things. One, Dara is an executor, and people do like what he's been able to do in the past at other companies. And he's coming in here with a vision to make the company profitable, and it's targeted sooner than what most people thought. So I think this setup is pretty good on a longer-term basis. I think in immediate term, I don't think people really care that much about this quarter. I think everybody's expecting their number and the loss to be significant. I guess everybody depends on what's actually happening for Q3, and did we start to see a pickup? And I truly believe you'll hear commentary regarding that.
Right. Dan, give us your thoughts. We had a lot to discuss here, obviously great management with some vision, Uber Eats, not just ride sharing and so much more. Dan, what's your takeaway as we expect these numbers after the bell today?
Well, I mean, if you talked about Uber Eats in regards to the strength there, I think they're expected to do bookings of about $6.32 billion on a total of maybe $10.8 billion. So it's going to probably represent about 60% of total bookings. But obviously, if you look at the rideshare portion, that is expected to drop about 30%. I think the big question that I'm thinking about, Nicole, going forward is we were all under the impression that we would get to a break-even point on EBITDA, let's say, in the next 12 months. So the question is, with COVID-19 and kind of how much does this push it out? Does it push it out to 2022? Or do they still feel that being management that they can get to an EBITDA break-even point anytime soon? So I think that's kind of on a lot of people's minds going into this earnings report.
For sure. Dan, I mean, when do you think would be a fair assumption that they could be actually profitable at least?
Profitable or EBITDA positive? That's the big question.
Well, when you're looking at EBITDA, yeah, go ahead. Tell us about EBITDA specifically. Go ahead. You can use that metric.
In terms of EBITDA, if you think about this year, I think consensus is about $2.2 billion loss. This quarter, I think it's about $880 million. If we go into 2021, it's about $880 million, about the same. And then in 2022, the expectations are that they would finally break even. You also have, Nicole, this situation out in California, which I know you guys have been following with AB5. It'll be interesting to see if they enforce that, because that would even maybe push it out even further, just because I think 10% of Uber's business is in California. So there are a lot of moving parts.
Right, and that obviously favors the workers more than the company. Brad, what's your takeaway? What's your rating on this stock, Uber, Lyft? Which one do you like the best? If so, why? Or do we buy these? Do we stay away from them? What's the advice?
Yeah, so our analyst, Dan Ives, has an outperform on both of these stocks. From my strategy perspective, I think they both make sense on a long-term basis. I agree with your guest here. I mean, EBITDA, profitability, both of those metrics are very important to watch. I would actually take the over on profitability happening sometime in 2021. And if that does take place, given this current environment, this stock is going to be significantly higher. So it trades at a pretty good discount to some of the growth peers. Now, there are a lot of moving parts for sure. Will there be caps in certain business lines in terms of fees that they can charge? But if you look at the ride-sharing business and it's where we are in terms of overall growth, if you look at the delivery side and what other tangential businesses that it can get into, and then if all of a sudden you start to fast forward 3 years from now and look at on the autonomous side, that offers a whole nother line of growth. So there's significant growth drivers, but the most important thing is the person leading the ship, and Dara has an incredible track record. So I would stick with Uber here as the favorite, just given his track record.
And you have a $47 price target. Dan, tell me more about if you would buy Uber or these types of companies such as Lyft or anything else that would be related to this.
Well, Nicole, we're a little bit more skeptical than maybe the street is in terms of this business. I still think it's a bit of a show me business. I guess what I'm really struggling with Uber is they basically 50% of their overall cost structure is dedicated towards insurance and the subsidies they pay the drivers and a host of other things. And the question is, how much revenue do they have to generate to squeeze that down enough so that they can actually become profitable? And I've been in this business since 1990, and this is somewhat similar to what we saw with companies back then where they couldn't earn money in terms of profits. So we counted the revenue and we counted all these other metrics like bookings and so forth. And for me, I think Lyft and Uber has to put a little more proof in the pudding and at least get to a break-even point before I think that we would really embrace the stock.
Let's talk about Uber Eats, Postmates, Grubhub. Quick thought, Brad. Obviously, they have Postmates now coming on board.
Yeah, that 2.65 billion price point was actually a pretty decent price point in our opinion. I think it does allow them.
So it's a good thing for them?
Yeah, I mean, it's certainly a positive for Uber. It allows them to get into these other businesses. If it's different types of deliveries, all of a sudden more of a concierge service. Can they pick up other things outside of just the typical food delivery or groceries? So I think it does expand it a little bit. They have some interesting technology that maybe they can integrate. They also get away and they can actually have some synergies here with getting rid of some operational costs. But overall, I mean, it gives them a little bit more, a better footprint in the West Coast. Obviously, Postmates is very LA based, but they're buying market share. That's what they tried to do with Grub. They weren't able to get the price they wanted. But at the end of the day, with more consolidation, that's actually a positive for the space. So I like the deal.
Right.
I do agree that we're in a prove me state for both of these companies. But if you took that mindset with companies like Amazon that didn't make money for a very long time and spent, you would have lost a tremendous amount of opportunity.
All right. I'm out of time, gentlemen. Thank you both so much. Brad Gastwirth, Chief Technology Strategist, Wedbush Strategies. Dan Morgan, Vice President, Senior Portfolio Manager, Synovus Trust Company. Thank you both.